Well, my background in stocks and finances, for whatever reason, I kind of knew my passion very early in life. And when I was around 14 or something, my dad asked me what I wanted to be, and I wanted to be in finance. And he wasn't very positive about that statement. But I pressed on, and by the time I was 16, I was nagging him enough where I was got this little form that he sent for called the Uniform Gift of Minors Act, which allows you to trade stocks at an age under 18, which is a legal age to contract. So I was trading, not a lot, but some, getting the stock market, evaluating stocks, investments when I was 16. And that pretty much carried through. I ended up, at my dad's direction, really moving into the aircraft industry. I started flying when I was 16 and took a brief one into aerospace. And I was always still, looking at the markets daily, looking particularly at the metals because I was very fascinated about monetary history. So my passion just was all about finance. So when I had the opportunity, I went back to school after my engineering degree and got a degree in finance and economics. And at that point, I was out of the aircraft industry and I worked for a couple of brokers. The whole stockbroker thing didn't really appeal to me. It wasn't anything near what I had imagined it would be. And then I actually went in and for a brief time, and this is not laughable, but perhaps, I actually worked for a coin dealer for a very brief time, and I didn't like their mode of operation. I'll just leave it at that. So I basically ended up consulting, trading for a living, writing in the arena, and kind of stayed in the background until the internet started to come to the fore. And I've always kind of been an early adopter. And so I jumped on the internet. Back in the beginning, with the C prompt, and there weren't like chat rooms. There were just these bulletin boards, I think they were called. I think they were called BBCs or something. I can't remember the right designator, but very few people were there. But I was. So that's sort of the background, degree in finance, and self-taught. And by the way, when I went through and got my degree, I was already self-schooled or self-taught in Austrian economics. So when I was given the Keynesian party line all through school, I never was confrontational. I was always kind of taught to, ask questions and get I would say adversary, but the other party in a discussion to rethink their premise. And so I was pretty good at that. And of course, in some of the papers I wrote, I certainly took the Austrian school. So I don't want to belabor it, David, but it was very interesting going through school with a whole different worldview on finance and economics and what's taught. So that made it a little more difficult for me at times, but nonetheless I persevered. As far as who are my mentors, well, I just mentioned anybody through the von Mises School, Murray Rothbard, of course, many that have written, through the last several, decades that are Austrian adherents would be mentors. Jerome Smith, who was wrote several books on silver investing, wrote many books on the currency situation, and he had actually mentored the Aden sisters. He had mentored Harry Brown. I'd say both of them, particularly Harry Brown, were also mentors of mine.
Okay.
And of course, books that I would consider mentors in quotation marks. I mean, security analysis, economics in one lesson. I mean, there's a lot of things out there that I have used, but as far as people I actually got to sit next to, have dinner with, etc., would be Harry Brown, Lou Rockwell, a lot of that. So I think that gives you a pretty good idea that, and I'm open-minded. I just think I'll add on, David, that I look at the broad spectrum. I don't just look at the Austrian school or look through that lens always. I look at a lot of stuff from the left. Excuse me. I look at a lot of stuff from the left, believe it or not, and to see what they're thinking and why. I think the left is pretty compassionate for the most part. There's certainly those that are, that labeled left that are violent, but there's people on the right that are violent. I mean, I'm not trying to classify,
sure,
in a general way. I mean, we all have our flaws. Let's face it, we're all human. But I do try to get outside of my box constantly. And as Ayn Rand said, and she would be a mentor as well, is that, check your paradigms, and if I'm wrong or learn something new, I certainly like to incorporate it. And that's certainly been the case in the silver market for me.
Absolutely. And, just like you're giving credit to your mentors, now I find that you're mentoring many people in regards to commodities, finance in general. And so I believe you are passing on that legacy, which I think is fantastic. You're known specifically, or among other things, you're known for your expertise in commodities such as silver. You mentioned in a popular article entitled 2017, a sterling year for silver, with a question mark at the end, that the so-called prophets out there are predicting that silver will eventually reach $100 or $1,000 or even $10,000 an ounce. What would be your response to these seemingly bold predictions?
Well, David, as you know, my thinking is my thinking. What do I mean? I think one of the best blessings I've actually ever had in life to live my passion was to go through engineering school first. And the reason for that statement is because there's no ambiguity in a lot of engineering work. I mean, if you take a blueprint and you specify what the specifications are for every, nut, bolt, rivet, what material, what the strength of material is, and there's specifications in all these things. In other words, a type of stainless steel, a type of a bolt. And you took that blueprint to China, Japan, Korea, Canada, Mexico, it doesn't matter. You would get exactly the same product because there's no ambiguity in that blueprint of how to build let's call it a door panel.
Right.
Or something as complex as an airplane for that matter. There'd be several blueprints in that case. So that gives me a certain way to think that eliminates not a lot of emotion and a lot of conjecture that doesn't really apply to fact. So I always try to start with a fact, something that's verifiable, something that's provable. And that has helped my economic thinking greatly. Now, the Austrian school is pretty much fact-based, but you cannot predict human behavior 100% of the time. There's many programs out there that are very good that predict human behavior 90% of the time or 95% of the time. But long-term capital management is the best example in recent times that you cannot predict human behavior 100% of the time because their predictive model, which was so good for so long, failed during the Russian ruble crisis, and it basically took down long-term capital management, almost took down the entire system. So coming back to your question, what do I think about these predictions of 100,000 and 10,000 an ounce silver? The fact is that in a non-backed currency system where there is no anchor to the currency, a hyperinflation is a possibility, and the number when you divide by zero could go to anything in the numerator. So you could have 10,000. I've argued time and time again that will not be the case in this market, in the current system, because in advanced capital markets, where you have a bond market, the bonds are a governing principle or a counterbalance to a hyperinflationary environment, which means that as the distrust of the currency increases, the natural effect is that the interest rates of the bonds will go up and the price of the bonds will go down. So that is highly deflationary. If you took basically, let's just do a thought experiment, do something extreme so we can think at the extremes and ready to come back to something more reasonable. But if you cut the bond price in half for the U.S. bond market across the board from the 30, the 10-year, the 2-year, and the T-bill, you would devastate the amount of credit out there in the system. And that would be highly deflationary, not inflationary. So, again, I doubt you're going to see